Hello everyone, this is the pre-market report video for today 19th June 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Last week for the fourth straight week, both Nifty and Sensex closed positive. However, that positivity was not seen in Bank Nifty as it closed marginally negative. Anyway, quickly let's see what happened on last Friday. Thursday positive US market made our market to open gap up of near 40 points and quickly in the next 15 to 20 minutes it added another 30 points and maintained there for most of the day. Then in the last 1.5 hours, short covering pushed it above 18,800 and Nifty did closed above 18,800. Why short covering on last Friday? If somebody short covering means they must be afraid of some events that has to happen this week. So, what is that event? The answer is FTSE Rejig. I think most of us now familiar with MSCI index. Similar to that, there is a FTSE, Financial Times Stock Exchange Index. Basically, they are also an index service provider. In the afternoon part of Friday, during the regular European time, they reshuffled their global index. So now, as per Nuvama Institutional Equities, the passive inflows due to the FTSE rebalancing was expected to bring a net inflow of $150 million to $200 million into the various Indian stocks like Adani Enterprises, Reliance, Wipro, Punjab National Bank and Bajaj Finance as their weightages have been increased. Both Adani and Reliance alone expected to have each more than $65 million US. Thus, Indian market was super duper bullish on Friday. Again, I came across this very interesting pick in money control. If required, please pause it and have a look. As per this, last week out of 5 trading sessions, in 4 trading sessions, mid-cap index closed all-time high. Second, on Friday, along with mid-cap index, Nifty Infra and Nifty FMCG2 closed all-time high. Again, they too mentioned about the FTSE index rebalancing. So, that much positive was our Indian market on last Friday. The advanced decline ratio was around 3:2, which means for every 3 stocks advanced in Indian market, 2 stocks declined. Again, because of this FTSE Rejig, I think the trade volume was kind of crazy. On Thursday itself, it was slightly higher and on Friday, it was even higher. If required, please pause it and have a look. As we all know, normally FII trades for 7,000 to 8,000 crore rupees. Both, they purchase for 7 to 8,000 crore rupees and roughly they sell for the same amount. Now, yesterday they purchased for near 18,000 crore rupees and they sold for approximately 17,150 crore rupees. Thus, FII net bought for 800 crore rupees. Similarly, DII2 supported the market and net bought for 680 crore rupees. Then, after the Indian market hovers, most of the European market also closed positive. Thus, all 3 US major index opened positive. However, couple of FOMC members, Fed Governor Christopher Waller and Richmond Fed President Thomas Barkin, in their respective interview warned that core inflation is not coming down like they thought and they were comfortable with further rate increases as inflation not coming back to the 2% target. This statement erased the optimism in US market and made the US market to close negative at the end. Dow Jones fell 0.32%, S&P 500 lost 0.37% and Nasdaq dropped 0.68%. In case of VIX, almost same as Thursday, it was near 13.5. Sector-wise, out of 11 major S&P 500 won, 8 were declined. Thus, declining stocks outnumbered the rising ones with 1.4:1 ratio. Coming to oil, other than US market, most of the market closed positive. Lots of global index reached all-time high, including the MSCI. Even in US, in S&P 500, 24 stocks reached the all-time high on Friday. All these made the crude oil price to increase around 1% for the second consecutive day. At the time of this video, WTI crude oil was trading near $72 US per barrel and in last Saturday, Brent crude oil closed near $76 US per barrel. Then regarding Indian areas, unlike US market, it was little better. Wipro dropped around 0.5%, but in comparison in Indian market on Friday, it dropped over 2% and ICICI Bank closed flat. Whereas HDFC Bank closed near 3% positive and Infosys increased over 1%. Both of them closed more positive than it closed in Indian market. So I guess still more positive run up left in it. Then about SGX Nifty, on Saturday at 3 a.m. Indian Standard Time, it closed at 18,900, which is kind of indicating a flat opening. Now coming to Indian stock specific, on Friday after the Indian market closed, HDFC Bank filed the report to SEBI that they requested the official clarification from RBI about the HDFC's short-term commercial lending. And RBI did confirmed in the email officially to carry forward those commercial short-term loans till the time of maturity, but RBI ordered not to reissue those loans or give any fresh loan. This is very positive since this is the confusion that kind of hammered both HDFC and HDFC Bank last week's share price. Again, those evidence we can able to see the positivity in HDFC Bank ADR in US market. Now the second info, as per government report, Finance Ministry met the Moody's, one of the 3 largest credit rating companies in the world, and our Finance Ministry pitched for country's sovereign rating upgrade. At present, Moody rates India at the lowest investment grade Baa3 with a stable outlook. Here, I think India was in the same lowest investment grade for almost 2 decades now. None of the rating agencies have agreed or come forward to increase the rating. Now, you may wonder what it's worth, why our Finance Ministry is trying to get it upgrade. To answer that, I mean like individuals, these ratings are used to judge the country's credit worthiness, thus it will impact the whole country borrowing cost. Now Rogers requested Moody's to comment, but they haven't made any comment, so if they did any positively means it will be a huge plus for India and Indian stock market. Finally, there was a rumor that this week SoftBank is going to offload their shares in both Zomato and Paytm, so careful with those stocks. And Dr. Reddy's expects to trade positive as US FDA certified them with a EIR. As a summary, at present, global momentum looks good, but multiple index in NSE hits the all-time high on Friday, so there is a chance that might cause the profit booking, especially FMCG, since the monsoon report was not good at all. For the moment, US future market trading slightly positive and SGX Nifty indicating the flat opening. Just for info, at present, Nifty is only 62 points away from all-time high value. Moving on, regarding the items to look out, there is not much as US market will be on holiday today. Coming to technical, last Friday Nifty closed at more than 6 months high value and thus it forms long green candle on the daily chart with a higher high and higher low formation. And on weekly chart as well, Nifty has formed a bullish candle which also supports further uptrend from the current level. Now 18,670 would be the key level to watch out as it is the 10-day moving average and below that any uptrend would be vulnerable. Below which Nifty could slip till 18,600 to 18,550. On the positive side, as long as it trades above 18,720, Nifty could move up till 18,980. Anyway, at present, there is a bullish crossover in MACD which can also might give an additional trust to Nifty for going forward. It is the indication of momentum continuation. So, the general outlook is positive and the market is expected to continue buy on dips until the important support 17,650 to 17,700 is broken. Then about Bank Nifty, again it too forms the long green candle with a higher high and higher low formation for the second straight day. In addition, on the daily chart, it forms the bullish harami kind of pattern and on the weekly chart, doji candle. All these are good and indication of positive momentum. On both Friday and Thursday, Bank Nifty managed to hold the support level at 43,400 which suggests that there is a buying pressure and also Bank Nifty faces immediate resistance at 44,000. A successful break above 44,000 will make the Bank Nifty to move towards 44,300, 44,500 levels. From option change in open interest, there was some call options unwinding between 18,700 and 18,750 and significant number of new put options added between 18,700 to 18,800. So, based on opening, if Nifty opens and sustains above 18,800 in the first 2 hours, then 18,800 can act as the immediate support. But by any chance, if it falls below 18,800, then 18,700 will act as the immediate support. From options open interest data, about call options, 19,000 mark is the maximum call option that without any put option open interest. So 19,000 is the resistance to break. Then coming to Bank Nifty, based on overall options open interest data, the next maximum call option open interest without put option is present at 44,500. So 44,500 is the resistance to break. Regarding put option open interest, 43,000 is the mark that got significant put options with very small call option open interest. Thus, 43,000 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.